So, on May 29th, 2026, the traditional maps of the Japanese stock market just they entirely broke down. I mean, the major indices, the numbers you see flashing across the evening news, they projected one very specific reality. But deep down in the algorithmic trenches, these autonomous trading bots were fighting a completely different, invisible war for survival.
Right, yeah, the underlying logic of the market effectively decoupled from the surface level data. And when you observe environments like this, it's like the standard rules of gravity are just suspended.
Yeah.
You basically have to stop analyzing standard portfolio optimization and start looking at fundamental, algorithmic survival mechanisms.
Which is exactly our mission for today's deep dive. We are stepping right inside that battlefield. We're going to unpack a highly specific set of observation logs that were published by the Team AI Lab Substack on that exact date. But before we look at a single piece of data, I want to set the absolute boundaries for you, the listener, regarding what we're actually doing here today.
Yes, that is incredibly important.
We are purely looking at how these proprietary algorithms are reacting to an unprecedented environment. There is zero financial advice in this discussion. I mean, no promises of future profits, no hidden trading tips, and absolutely no suggestions on what you should buy or sell. We are simply scientists examining an algorithmic petri dish.
Exactly. That objective framework is crucial here, because what we have is essentially a clinical observation log. We are analyzing experimental simulations under highly specific, very extreme conditions. The algorithms we're tracking, they aren't human traders experiencing panic.
Right, they don't have emotions.
Exactly. They're purely mathematical constructs that are processing a structural anomaly in real time.
And to understand how they process that anomaly, we really have to look at the two radically different teams of algorithms deployed by Team AI Lab. Because, how a machine is programmed to survive tells us pretty much everything about its core philosophy. So we are observing a clash between Team Mountain Climbers and Team Wave Riders. Let's start with the Mountain Climbers. What is their philosophy of equilibrium detection?
Well, the mountain climbers operate on this premise of seeking absolute stillness in the volatile system. They are constantly scanning the market environment for a space that just does not move.
Okay.
And mechanically, I should point out, they aren't just hiding in cash. They are executing incredibly complex calculations to find beta neutrality. They're looking for assets or combinations of assets where the localized volatility mathematically cancels out the broader macro market swings. It's really an active, aggressive search for a mathematical anchor.
Okay, let's unpack this because I picture it almost like active noise-canceling headphones. Like, the headphones don't just block sound with padding, they actively listen to the ambient chaos and generate an exact inverse sound wave so that all you hear is silence.
That's a really great analogy, actually.
So the mountain climbers are trying to generate an inverse wave to the market's volatility to create this localized zone of zero movement.
A perfect way to visualize it, yeah. But finding that neutral ground in a high beta environment, where everything is swinging wildly, it requires immense computational precision. And then on the flip side, you have Team Wave Riders. Right. Their underlying architecture is entirely different. It's based on surging force tracking. So they look at the exact same market data, the exact same extreme volatility, and they attempt to harness the kinetic energy of the chaos itself.
But wait, how does an algorithm actually do that? How do you track a surging force without just getting totally wiped out by a random price swing?
Well, they track order book imbalances, liquidity vacuums, momentum ignition, things like that. Instead of looking for where the market is stale like the climbers do, they look for where the market is literally breaking in a specific direction.
Wow.
Right, so if there's a violent sweeping movement caused by, say, panic selling or euphoric buying, the wave riders attempt to sync their directional vectors with that sheer momentum. They use the energy of the anomaly as their own engine.
So it's like two survivalists in a hurricane. One bolts themselves to the bedrock, hoping to ride it out, and the other literally grabs a surfboard. But in an environment this hostile, is there really a safe choice between the two? To see which approach is actually surviving, we need to look at the staggering disconnect between these algorithms and the broader market.
Yeah, the season standings contrast against the major indices is where this gets really weird.
Let's lay out the numbers for everyone. In this specific simulation, performance is measured in proprietary points. The mountain climbers, compared to the Nikkei 225 index, are sitting at minus 9.7 points. Against the TOPIX, they are at minus 4.4 points.
Which is a huge gap.
Yeah, and the Wave Riders are in a similar boat. Against the Nikkei 225, they're at minus 8.8 points, and against the TOPIX, minus 3.5 points. So both teams are just heavily lagging the benchmark.
Right, and what's fascinating here is that in traditional algorithmic modeling, a performance gap of this magnitude represents an abnormal situation. It's not just a bad day, it indicates a fundamental regime shift.
The rules have changed.
Exactly. The major indices are painting a picture of relatively normalized or at least coherent market behavior. But the algorithms operating deep down in the granular data are experiencing violent friction.
But wait, I have to challenge the fundamental premise of this disconnect. If the Nikkei and TOPIX are literal aggregations of the market, I mean, they are made up of the very stocks these algorithms are trading, how can the algorithms be experiencing a completely different reality?
It's a fair question.
Right, because an asset's price is its price. So if the indices, the supposed barometers of the market, are fine, why are the trenches an absolute minefield? Does that mean the normal maps we use to navigate are just currently useless?
Yes, essentially, because indices are market cap weighted aggregates, which makes them inherently deceptive during structural shocks. A few massive companies can hold the index completely steady, and that creates the illusion of a calm, rational market. But down in the microstructure where these algorithms actually deploy their capital liquidity, just evaporates. Bid-ask spreads widen violently. The historical correlations between sectors just completely break down.
So the algorithm tries to make a logical move.
Exactly. It tries to execute a perfectly logical trade based on a decade of back-tested data, and the liquidity simply isn't there. Or the price slips massively right before execution. So the map you see on the news looks green, but the actual mechanics of trading the terrain have completely fractured.
That makes total sense. The macro view is masking the micro chaos. So if the order book is that toxic right now, how does an autonomous system decide whether it's even safe to operate? I guess that brings us to the 9.00 JST Daily Scouting Report. This is where the algorithms determine their new talent draft.
Right, essentially deciding how many new units to deploy into the current environment.
Yeah, and the results of those calculations on May 29th were just incredibly stark. Team Mountain Climbers, the ones seeking equilibrium, ran their probabilities, looked at the widening spreads and the breaking correlations, and drafted absolutely 0 new units. They deployed no one.
The draft process is a fascinating window into an algorithm's internal confidence intervals. Before deploying new capital, these systems run thousands of Monte Carlo simulations to calculate the probability of success in the current, second-by-second environment.
And the climbers basically looked at this storm and effectively said, shut the doors, nobody else goes out there.
Exactly. While Team Wave Riders, who were built to thrive on momentum, ran their own specific internal models, they scouted the entire market for surging forces and drafted exactly 1 new unit.
1 single unit, so a 0 and a 1. The algorithms quantified the environment and statistically concluded that deploying fresh capital was pretty much a mathematical error. The climbers locked the gates entirely, and the riders found exactly 1 microscopic setup that met their risk-adjusted threshold.
And this extreme caution perfectly frames the tension between the new forces and the main forces.
Right, let's talk about the main forces.
The new forces are sidelined because the environment is too unpredictable. That means the entire burden of survival falls on the main forces, the algorithmic units that were already deployed before conditions deteriorated so badly.
And these main forces are currently locked into a mandated 10-session roster. I should probably define that for the listener. In the simulation, once a unit is deployed, it cannot simply panic sell and retreat to cash after 5 minutes. It is literally forced to hold and operate through a 10-session protocol.
Right, which is specifically designed to test the true endurance of the strategy over a sustained period.
Yeah, and Team Mountain Climbers currently has 8 active units trapped in this protocol. Team Wave Riders has 10 active units.
The psychological weight of this data, well, if we anthropomorphize the algorithms for a moment, it's immense. These 18 units are navigating a broken market microstructure with absolutely no reinforcements coming in behind them. They are running their protocols in total isolation against a completely abnormal market.
Which is where we arrive at what I think is the most compelling data point in the entire log, because here's where it gets really interesting. Amidst this massive index divergence, amidst the 0 unit drafts, we can actually see the survival rates of these main forces. We're looking at which units are actively holding positive points right now.
This raises an important question, right? How are they surviving? Because this metric reveals who is actually managing to adapt to the anomaly.
Yeah, so out of the mountain climbers' 8 active units, an incredible 6 of them are holding positive points. And the wave riders, out of their 10 active units, an astonishing 9 are holding positive points.
This is where the observation becomes truly profound. I mean, the vast majority of traditional trading strategies would be chewed to pieces in a microstructure, breaking down this severely. But these specific units are functioning like lighthouses in the dark.
Lighthouses in the dark, I like that.
Yeah, they aren't relying on the breaking correlations. They're parsing the chaos and finding microscopic slivers of stability that human traders couldn't even perceive. They're the ultimate adapters.
The resilience is wild to see. And looking at those numbers, I mean, 9 out of 10 for the riders versus 6 out of 8 for the climbers, it suggests that in a highly chaotic shock, the wave riders' philosophy actually has a slight mechanical edge. Like harnessing the chaos gives them better survival numbers than just seeking stillness.
It really comes down to the physics of the market. Momentum, even when it is completely irrational or driven by panic, still provides a vector. A machine can track a vector.
Right.
But finding total equilibrium, pure stillness, in a system where every single variable is violently fluctuating, that is mathematically much harder to execute.
That is a great distinction. Tracking a moving target versus trying to build a perfectly still platform on like a shifting tectonic plate.
Exactly.
But holding positive points during an active deployment is only half the battle, right? Because eventually that mandated 10-session protocol ends. We also have the final scorecard for the units that just completed their full tour of duty today.
Yes, the exit logs. These strip away the theory and give us the absolute mathematical reality of this simulation.
So let's examine the mountain climbers' exiting units. They were operating specifically in the information and communication sector. They completed their 10 sessions today and exited with exactly plus minus 0.0 points.
0.0.
Literally exactly flat. When I first read that, I thought, well, they didn't make anything. But when you apply the context of their philosophy, achieving pure neutrality in this storm is an engineering marvel.
It is the ultimate validation of their code. I mean, what is their objective? Equilibrium. The information and communication sector was likely experiencing the exact same erratic chop as the rest of the market.
Yeah.
To navigate 10 sessions of that chop and exit with a net zero impact means their noise-canceling algorithm worked flawlessly. They actively traded their way into absolute stillness. They didn't capture a massive gain, but they completely protected the core capital from the storm.
They successfully bolted themselves to the bedrock.
Yes.
Now, contrast that with the exiting units for the wave riders. They were operating across 3 distinct areas: foods, electric appliances, and land transportation. They completed their 10 sessions and exited with plus 4.6 points.
They took on the turbulence across multiple, seemingly unrelated sectors, tracked the micro-imbalances in the order books, and successfully extracted positive momentum from the anomaly.
And the true impact of these differing philosophies, it really explodes when we zoom out to the overall season points. Because the exit logs are just the micro view of today's graduating class, right? The season points show us the compounded effect of these algorithms operating over a long timeline.
Right, the macro view of their performance.
Yeah, so Team Mountain Climbers carried over a balance of plus 14.3 points into today. They added a highly respectable daily score of plus 19.8 points, bringing their total season to a very healthy plus 50.9 points.
Their equity curve is basically a steady, methodical climb. It perfectly mirrors their namesake. They avoid steep drawdowns by constantly seeking that equilibrium.
But the Wave Rider season log is a completely different beast. They entered today's simulation with a harsh carryover balance of minus 29.1 points. They were deep underwater.
Very deep.
But because their entire architecture is built to track surging forces, when the massive anomaly hit today, they exploded. They pulled a staggering daily score of plus 56.6 points.
If we connect this to the bigger picture, that swing perfectly illustrates the asymmetric risk profile of a momentum-based algorithm. When a market is just chopping sideways with no real conviction, a wave rider algorithm will often take on water ant there that tries to catch waves that instantly fizzle out, which leads to that negative 29-point carryover.
Right, it just gets chewed up by false signals.
Exactly. But when a true structural anomaly occurs, when the surging force is genuine and violent, the riders are uniquely positioned. They latch onto that massive kinetic energy and ride it for maximum extraction, which results in a 56-point single-day swing.
They entirely erased their massive deficit in one single session, bringing their total season to plus 102.5 points. They effectively doubled the overall season score of the steady mountain climbers, purely by harnessing the chaos of today's broken market.
We are essentially observing two completely valid, highly effective survival strategies here. One protects capital through mathematical neutrality, and the other accepts significant drawdowns in exchange for exponential capture during massive regime shifts.
So we've tracked the mechanics from the zero-unit drafts to the active survivors all the way to the massive swings in the season logs. So what does this all mean? For you, the listener, what we have just walked through is a live stress test of machine logic in a fundamentally broken environment.
Right.
But what I find most fascinating isn't just the data itself, but how Team AI Lab actually views that data.
This is a critical takeaway regarding their research perspective. Earlier, we noted the Wave Riders were deep underwater at minus 29 points, and both teams were heavily lagging the major indices, right? In a traditional financial setting, those metrics would trigger pure panic.
Oh yeah, heads would absolutely roll on the trading floor.
But in the realm of algorithmic evolution, Team AI Lab does not recognize the concept of defeat. I mean, that is a human emotion. To the researchers, a harsh carryover balance or a sudden disconnect between their algorithms and the Niki is purely neutral data.
It's just an objective mapping of new boundaries.
Exactly. Today's brutal conditions, the lack of viable draft setups, the extreme friction in the order book, it is all categorized simply as valuable observation data for the next victory. This cold, forward-looking research attitude is really the only way to ensure long-term adaptation.
Because an algorithm doesn't feel despair when the market stops following the rules.
No, it simply logs the new rules and begins calculating the next iteration of its survival code.
It simply logs the new rules. Think about how profound that is for a second. Bringing this entire simulation back to you, listening right now. You might not be an autonomous algorithm hunting for beta neutrality in the information and communication sector, but you absolutely face environments in your own life or career where the macro indicators say everything is fine, but your boots on the ground reality is totally chaotic.
You face moments where the map you were handed no longer matches the terrain.
Right, and the question is how you process that friction. Do you expend energy being frustrated that the map is wrong, or do you start gathering data on the new terrain? Which leaves me with one final thing for you to ponder today. We spent this deep dive analyzing how machines react when their environment totally breaks down. They don't panic, they either find mathematical stillness or they ride the turbulence. But most importantly, they treat severe chaotic disconnects purely as mandatory data gathering required for their next evolution. So how would your own decision-making change today if you viewed your biggest current obstacle not as a loss, but as a mandatory 10-session protocol required to upgrade your own personal logic?